Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming U.S. employment report and the potential reaction in the markets. I'm Maria Pachordadis, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, the Fed is on a mission to cool inflation, and it continues to raise interest rates at an aggressive pace. We'll get the latest non-farm payrolls data on Friday. Are we likely to see another solid jobs report, and what will that mean for the Fed?
Hello, Maria. Yes, we are quite likely actually to get another solid overall jobs report. So you would have expected the jobs market to start softening a little bit, to weaken a little bit as the Fed was raising interest rates. That's what the Fed wants to achieve, right? They want to weaken the labor market a little bit and hopefully cool off demand. And that will hopefully translate into lower inflation. So that's their line of thinking. Now, what has been happening in reality is quite the opposite. The US jobs market remains really robust. So if we take a look at some forward sort of looking indicators of the labor market, some of the indicators we've gotten already, those point to another pretty good report. So specifically, weekly jobless claims continue to fall throughout September. And what that tells us is that the people filing for unemployment benefits, the number of people kept declining. So that means fewer people lost their jobs during the market, the opposite of what the Fed wants. So it looks like it's going to be another relatively strong report. The US jobs market hasn't started to cool just yet. And that's obviously good news for the economy, but it's bad news for the Fed that is trying to achieve some weakening in the labor market.
So how might all this affect the dollar in the short and longer term?
Yeah, so look, right now the markets are pricing in almost a 2/3 probability, so 65% almost for another three quarters of a percentage point rate increase at the next Fed meeting. And if we get another strong jobs report, that probability could rise, could go closer to 100%, and therefore we could see the dollar gain a little bit further. Now, in the broader picture, I also think that the outlook for the dollar remains positive overall. So yes, we've had a huge uptrend so far, rally this entire year really. But the elements that brought the dollar to the dance, in a sense, they are still there. They haven't changed. So the Fed is still raising interest rates faster than most other central banks. Safe haven flow, safe haven demand for the reserve currency is quite elevated considering what's happening across the world. And we have a lack of viable alternatives. We've got the euro struggling with the energy crisis. We've got the pound being decimated by the government's latest budget plans. We've got the Bank of Japan that is actively trying to weaken the yen. And of course, we've got the property collapse in China. So combining everything, it's difficult to call for any trend reversal in the dollar just yet.
Marios, thanks so much. And thanks for joining us at XM.com.